Good morning and welcome to Blain's Morning Porridge. It's February 23rd, 2026. Private credit and Treasury wobbles. Relax. Let's start off with a quote. Apart from that, Mrs. Lincoln, did you enjoy the show? Sometimes you just have to laugh. The tariff judgment against Trump raises all kinds of elevated, chaotic tantrum risks in treasuries, while market fear what wobbles in private credit might conceal. Everything in markets are connected. When something cracks in credit, someone somewhere else will start screaming. An interesting week's play here in prospect for global markets this Monday morning. There was a distinct judder moment on Friday after the US Supreme Court declared Trump's emergency tariffs as unconstitutional. He didn't react well, did he? The market shrugged and wondered, where do we go from here? Now, I suspect the driving theme for the week across markets will be elevated fears on bonds and credit markets, and how swiftly risks and concerns jump the gap to cross-contaminate between bond and equity markets. So here's some questions for you. How will markets react to Trump's tariff snafu? Weren't tariffs going to pay off the USA's $38 trillion debt? No, they were not, but they gave the impression they might, and that's what mattered to Trump's voters. How will markets react to the wobble signs from the private credit markets as Blue Owl acts to control retail redemptions on certain funds, while sharks in the guise of Saba, that's Boaz Weinstein's hedge fund, get ready to pounce with a 35% discount offer to NAV, that's their net asset value? Could private credits trigger a credit liquidity crunch that will impact all markets? And the fact that lending to software companies, hammered by the AI threats to their businesses, is at the core of the Blue Owl lending concerns highlights the circularity of markets and that credit lending is as much about risk as equities. And how will all these forces interrelate with all the market noise around geopolitics, AI, liquidity, domestic politics, Iran, and the growing sense of instability that seems to pervade absolutely everything these days? Cheer up. As I'll scribble at the end of the porridge this morning, life is still good. The first part of the problem are the potential effects of the tariff ruling on the Trump administration's credibility at a time when concerns about the US debt quantum, its sustainability, and the potential consequences of how the US repays its debt on global investment flows. The market has so far been watching the Trump, Bessett, Hassett, and Lutnick show with polite concern, assuming that these guys have a plan, but now beginning to wonder what happens if they prove to be clueless, even as Trump crosses the line from creative disruption to chaotic fury. And credibility is critical in times of market tension to stem steaming pots from boiling over. And if there is a financial crisis in the offing, perhaps from unknown hidden valuation issues in the private credit markets, is there confidence they can be stemmed and resolved? I have my doubts here about how global markets would react to a crisis today compared to the very close alignment that we saw between international central banks and treasuries when we had the global financial crisis, the GFC, in 2008. Now, I don't think that anyone in the serious parts of the bond market really believed that Trump's political posturing that tariffs were going to replace domestic taxation as a source of US funding. It was well understood that they were effectively a consumption tax on US producers and consumers, which would balance the tax bribes that were given away in the big beautiful funding bill. No one took Trump's throwaway lines about increasing US defense spending to 1.5 trillion per annum particularly seriously, but concerns this morning are all about how to stem US spending during the current hegemonic struggle with China. Going broke just before the potential outbreak of World War III is not a good plan, And if you want to see how bad that debt situation is, just go check out www.usdebtclock.org. That number is spinning faster and faster and getting very close to 39 trillion. The tariff noise puts the scale of US spending into perspective and is likely to elevate concerns on the massive scale of the debt problem and how sustainable are the plans to keep it rolling over. So, lest we forget, this year the USA has around $8 to $9 trillion of federal debt that is rolling over to refinance. That's about 30% of its total outstanding debt, and the consequence of rolling over maturing short-dated debt to finance long-term government obligations issued when interest rates started to rise is about to become clear. The US government is facing a budget deficit of around 1.9 trillion in 2026, making the total to be funded in the market around 10 to 11 trillion dollars. And that's happening at a time when overseas buyers of US debt are increasingly recalibrating their enthusiasm for treasuries and the dollar's exorbitant privilege as global trade de-dollarizes. All of which means that the Fed will probably need to indulge in some good old quantitative easing, that's buying US treasuries, to pull down bond yields as Trump will insist, thus flooding markets with liquidity, as happened from 2010 all the way through to 2023. Now that pushed up asset values, but this time it will be happening in an already hot, inflation vulnerable economy. Will global markets buy it? In the post 2008 GFC economic crash, inflation was not an issue. That's because we had very lethargic post crisis economies, and China was exporting deflation around the world as the manufacturer of everything at the cheapest price. But today it's very different because latent inflation is a very real threat and will further discourage bond buyers. Inflation is the worst thing for a bond buyer, which means you're going to see a negative bond feedback cycle. In other words, a bear market. Meanwhile, a full-on credit wobble on the back of the rising concerns about private markets is also a possibility. Today, credit spreads are close to historical tights, despite the numerous warning signals of multiple credit cockroaches hiding in plain sight. The fears around private credit are largely around its lack of transparency. We simply don't know what the alternative private credit funds have lent on, and it probably never should have been a product that was sold to retail investors. But what we do know is that private credit firms do deals and how they manage them, and for the most part they do that aggressively, but they do it well. Now, when Blue Owl, the US fund, gated their retail private credit funds, let's just call it gated, it's not quite, it's a way of repaying with trouble. Last week, it sent a similar signal to the one that Bear Stearns sent in 2007 when it started gating its structured credit funds, which eventually led to the global financial crisis about a year later. And that was all due to troubles in the collateralized debt obligation mill. There were multiple housing and business defaults in the 2008 global financial crisis, and there will be private credit defaults in the wings, but most deals in 2008 actually survived in fairly good shape, and that's why apologies for my tumbling over my tongue this morning, and that's why credit trader Boaz Weinstein's fund Saba is trying to buy the Blue Owl deals at a big discount to their net asset value. He's figuring out that although there will be credit cockroaches, generally these funds will pay out in full. It's a typical distressed debt play. The big issue is what happens when private capital markets investors, including in private equity, find that they cannot exit their funds and the private credit markets then find it difficult to access new liquidity to roll over existing loans, resulting in a slowdown which triggers rising defaults. And these things tend to happen fairly quickly in terms of a negative feedback loop accelerating against itself. And what would a liquidity hiccup do to all the plans of the massive hyperscale data center build-outs? OpenAI has already admitted that it's going to scale back, and they're just the first. There are clearly choppy waters ahead. But cheer up. Remember Blain's second market mantra. Things are never as bad as we fear, although they are seldom as good as we hope. Now, over the last few weeks, I felt like I've been battering my head against a world of stupidity. There are lots of really annoying things that seem to define the modern world, and one of these are the potholes on our street, which now threaten to swallow whole cars. And then last week in Edinburgh Airport at the budget car rental stand, I discovered that you can only use a credit card, not Wi-Fi contactless payment like Apple Pay, to pay the deposit on a car that you want to hire for a couple of days. Now, I haven't used a credit card for years, I've just used my phone, but I do keep a credit card in my wallet. I just can't remember the code for it, so I was completely stuck. Now, it would cost Avis Budget around £20 to update their tills, but they haven't done that because, well, that would be money spent, and why would they want to improve the customer experience? You rent a car from them, they get your money, and then you can't pay the deposit. Fortunately, another rental car at the market at the Edinburgh Airport did take Wi-Fi. And then we've installed solar panels. Months later, we're still waiting for Octopus to install the updated digital box that allows us to reap the benefits from our batteries. But things do get better. As I said earlier, things are never as bad as we fear, and Saturday night restored my faith in the world. We're very fortunate that we have a fantastic local band, the Blue Water Giants. They're a great bunch of musical pros who played in bands like Procol Harum, Status Quo, Tears for Fears, and a bunch of others, including Simply Minds. And they played the best gig in the history of the world, got us all out dancing, and danced our fears away, making the world a much, much better place. That, and wins for Ireland and Scotland in the Six Nations rugby. What's not to like? Bring on a Treasury crisis. Bring on a credit crunch. Sun will come up tomorrow. It always does. Anyway, out of time and back to my day job, which is writing the morning porridge first thing in the morning before I rush off and do alternative financing, and you've guessed it, the private credit markets. You can get the Morning Porridge on www.morningporridge.com every day, and if you sign up, you get it delivered fresh to your inbox first thing every morning. I'll be back with something completely different tomorrow. Thanks very much for your time and attention.